Good afternoon and welcome to the Pro Trader Orientation webinar. Now, what we're going to talk about today, we're just going to do a very quick orientation around the software. So when you first start and you've got in, you'll see here that in the right-hand corner, you can put any code that you like, and that's where the codes come up. If you're looking for a code, you see how you've got this icon here called Find Codes. Now just click that, and you can all the codes are there alphabetically, and you can also find all the indexes that are on the Australian stock market in that section. Now below that you will have some other general information about stocks, and some things like dividends and so forth. And below that again, you've got basically a snapshot of share price data. So you just click that and scroll through, and you can get 1 day at a time. Now, when we do a scan, you'll find that the scan results will come up down here, and then below that is watch lists. Now, a thing to bear in mind is that one of the keys to success for using the software is the use of watch lists. The more watch lists you have, the more you'll get out of the software. And so, for instance, I have like the ASX 200 watch list. I have individual index watch lists, like for instance, consumer discretionary. I also have sector watch lists. So i.e., I have gold stocks that have produced a certain amount of gold. I have miscellaneous mining stocks. And I also have things like oil stocks. And one of the very popular methods with creating watch lists is a lot of people, let's say, will do one on over the weekend, and they'll create one, i.e. here, May the 29th. The reason being is that it then means that during the week, you can then actually start scanning your watch lists as opposed to the general market. Now, you've also got this intraday daily data on and intraday that's off. So remember that the market actually, the last stock in the market opens at 20 past, and our intraday data updates on the hour at the every hour and 20 minutes at the past. So before we go into the different types of charts, we've also got this timescale functionality at the bottom. So if you move these two bars, you can then move the charts back and forth. Now moving up here into the left-hand corner, and then I'll go clockwise. So we've got 8 different key charting types. A lot of people, I started out with line, then I moved on to bar chart, and now I primarily just use candlestick. But we do also have some weekly average ones like Kagi as well as Heiken Ashi. One of the ones that I really do like is this comparison chart. Now the reason why I like it so much is it enables you to basically compare apples against apples within a certain index. So let's say you're interested at looking at some gold stocks, and you can put the different codes in here. Now you can have up to 5, and you'll see here in the left hand corner you've got the different stock code along with the color, and it basically says, right, if we put $1 into each stock a year ago, how would that dollar have performed? And this is what I mean when I say that it enables you to compare apples against apples. I absolutely love that functionality. It's also very good for when you're trying to compare against different indexes. So let's say you want to see where is the money going. If you're trying to try a bit of Mark Faber index investing, XDJ, and so once again you can see here it enables you a maximum of 5. Then we can see which is the best index, and you can see here that the healthcare has been very good, but really since around October the 13th, the gold sector has really started to be very strong. So once again, that's in the comparison chart, and it's a very, very good function. For the rest of this webinar, I'm just going to use the candlesticks. Now we've got 3 key data ranges, time periods. You've got daily, weekly, and monthly, and then there's 11 different ranges. Now, one thing I'd always encourage you to do, as you can see here, is a little trick. And when you look down here, for instance, here is where you can draw all your trend lines. Now, when you click on the trend line, you can change it to be any color, any kind of type of line, as well as, say, the various colors. So what I would always encourage you to do is choose one color per time scale. And what I mean by that is I use blue for daily, I use a broken red line for weekly, and I use a neon green and neon pink for monthly. And the reason why that's important is that it means that when you're, no matter what time scale you're in, you can then see potentially historically or historical support and resistance lines that may have an impact now on the share price. And so, and you can see here, for instance, and I find this quite fascinating, that a trend line that was formed 11 years earlier in 2008 to ascent in 2019 became a resistance line, is where BHP bounced from. Or if you look here, a trend line that was formed 14 years earlier then is where BHP bounced from during the 2020 COVID correction. So it's a very important habit, in my opinion, to get into, and that is always choosing a particular color per time scale. So before we get into the basic scans, I just want to touch on some of these other icons up here. Now you've got things like Frank's Friday broadcast.
Good afternoon, Frank Watkins, 29th of May 2000.
So that is uploaded, there's a new one every week, Friday afternoon, and that is only available for members in the software. Now, one of the other sections we've got here, we've got this one called training mode. And I've got to say, I absolutely love the training mode video. You would have been, there is a separate training mode video available, and it would have been emailed to you as well. Now, what you'll find is, I'll just do it very briefly, you can pick any date and then you hit OK. Now, why it's so important is that it enables you to develop and fine-tune not only your understanding of technical analysis, but also to start understanding the correlation between technical analysis behavior and technical analysis patterns and stock market or stock behavior and stock movements. And so you can start identifying correlations. And so a classic example would be here, as I say, you can then scroll forward. You see these two previous days and next day. As I say, it not only does it allow you to do back testing, but it enables you to find correlations. And so it is a fantastic tool that I would always encourage people to use. So a classic example here is, let's say I'm trying to find, a correlation of a technical analysis indicator and an entry point. And two of the most important things that you need to develop in any trading plan is a consistent entry and exit point. And so what I'll do is here, for instance, you've got this trailing stop down here, and that's another point that I would always encourage you to develop and understand how to use trailing stops. And we can see here that you can set your entry price, you can set your stop loss, and you can also set your trailing stop. And there's different kinds. I like to use this based on a step price. And please also understand that it's designed, and the whole software is designed to be able to be replicated on your online trading account, your online trading platform. It's very important to understand that the ProTrader software is a tool to be used in conjunction with your online trading account. It's not used to be replaced. But look, let's see. So we're looking for a 3-day OBV plus an RSI breaking up. Then we can just scroll through and let's see if we find there. You can see my stop loss coming on. And let's just see how we go. And we can see now that it's heading up, and we've entered we've found a good entry point. And so, as I say, it's a wonderful tool to start finding correlations. It's also a very great tool to start identifying and understanding the technical analysis indicators and scans. So if you ever want to turn a technical analysis function on, one of these boxes will be red. You simply click it. If you don't want it, you unclick it and it turns it off. Now, if you ever want to find out what any of these mean, just go to Uncle Google. This is where I would always go, and just put in the indicator that has come up that you're inquiring about. And you'll see that you'll very likely, Wikipedia has a lot of them, but the one that I would encourage the most is Investopedia. And I still that, you would use it now after years and years of using the software, and you usually have a great description as well as a very good video. So as I say, if there are any of these indicators that you're unsure about, always go to Investopedia to find out. Another element here in the training mode that I would encourage you to use, make sure you see this trade planner function up here. Now, the reason why I love the trade planner is for two reasons. One, you can start building a hypothetical portfolio, and you can start putting your trades in as you go. And what happens is, if you use a Excel spreadsheet or even pen and paper, what I find is human nature is that you invariably will start fudging numbers. You're like, oh, you know, I really wouldn't have paid that much for it, or I would have got out at this price, I wouldn't have got out at this price, or no, actually, I really would have sold it on that day. And that's human nature. We all do it. Whereas by using the trade planner, when you're in the training mode, it keeps you honest, because you can't fudge it. Once it's locked in, it's locked in. And what I always tell people is that if you can't make money in the training mode, then for the love of God, you don't want to be going into the real market, because you're not going to make money there either. You must first, with your trading plan, be consistently making money in the training mode before you start trying these entry and exit points in the real market. Another one, of course, is once you've developed a trading plan, you can then, of course, use the training mode and start using, scrolling through your watch lists and using it on all the shares. Is it possible to find entry and exit points that you believe for all stocks? Because any good trading plan must have a universal capacity to go across all stocks. So look, that's the training mode. Another thing to remember is, you see all these indicators down here. Everything is in here. You just go to that icon, this icon that's like the cogs called settings. You click on that, and you can change everything in the software. You can change, the background. You can change the fonts, and all those values that you see. It's all here. Everything can be, let's say if you want an RSI of 16, no problem. You can change it. You can change all the colors. You can change things like the volume. Let's say you want to have, the volume chart down here. See, now it's green for up days and red for down days. The whole lot, the software can be completely designed and customized to meet your individual needs. So all of that can be changed in this settings section. Now, to move forward, let's go and do the basic scans. So a lot of these are also mentioned in the My Daily Scan routine. But for today, I'm just primarily going to use the ASX 200 watch list. One of the things to remember, if you're using the filters, you only use the filters for the general market scan. And also remember, you can also scan for sectors as well as industries. You don't use the filters if you're using a watch list. And the reason why is because your watch list acts as a filter already. So hence, that's why you don't need to use the filter section if you're using a watch list. So let's see how this first one goes. And the other thing to remember is, see this one here called period? A period is a trading day. So if I'm looking for 60, well, that's a quarter. 40 is 2 months. 20 would be a month. If I want a half a year, I'd be looking, 120. If I'm looking for 12 months, then I'm looking for 240. So always remember that a period is a trading day. And also note that you can also look for shorts. If that's, if you're into, you can go for high, low, close. You can look for breakdowns, breakups. And all these values can be changed. So there's our first scan already. And you can see here, this is where all the scan results come up. So we've got 50. And what you'll find, you can either scroll this way, or you can scroll this way. And once again, you'll see here that what you'll find is that you've got the technical analysis indicator that is activated will be here. And then next to that will be the share, the stock code. And so a quick way is just to scroll down where it says scan results. Then you can start going through here. Now, let's just create our own. You click on that and you click create. We shall call this demo watch. Now, another thing to remember is if a stock comes up in a scan, please understand it is not saying that this is a buy or a sell recommendation. This is not what the ProTrader software is at all. All it is saying is that this is a stock that has met or has activated that technical analysis indicator. And it's up to you to then start discerning and identifying what stocks you feel comfortable with buying or however you wish to move forward. But the software itself does not give you buy and sell recommendations or anything like that. Now, the methodology that we refer to, and it's also in the notes, is we call it the SSA, scan, scroll, and add. So now we've scanned, and let's just go through and scroll. And if there's anything that we find interesting, you see this plus symbol, we will add it. If you ever want to get rid of a stock in the watch list, you just hit the X and you'll get rid of it. We can also, of course, we can rename watch lists, we can delete watch lists, we can also import and export so that all that functionality is available. So once again, here I am, I'm just going to scan, scroll and add. And anything that I think looks interesting, I'm just going to add to my stock. And you'll see once again, so we've got breakouts here, we've got saucepans here, triple tops, triple bottoms. So everything, as I say, whatever you can see that the indicator that has occurred, and then you can see the stock code. And it's a case of get used to it, scan, scroll, and add. Now, another thing to be mindful with when doing scans is try and make sure you stick with certain groups. One of the things that's crazy is you'll have scenarios where people have every single box ticked. And that is absolutely crazy, because what it means is, by the time that you finish the scan, you've got no idea what it is that you're actually looking at. So here's a classic example that I would do, and I just call this is just the breakup scan. And basically I've got here, I'm looking for price and volume, and these four, they work together. And and it's always better to do more scans that are selective than less scans with every box ticked. So once again, I'm going to use the ASX 200. I've only got these four. Let's just see how we go. And you can see here that we've got 38. But what it means is, though, that when I'm scrolling through this, once again, scan, scroll, and add, at least I know what I'm looking at. I'm looking at stocks that have had a price or a volume breakup. So it's very clear to me, wow, look at that volume there. Wow. It's very clear to me exactly what this scan is telling me. And I would do that scan every day. Now, another scan that I do every day, I have every box unticked. You see this one here called Find Any Stock That Left a Gap Up. So now, once again, you can change this. You can look for 9 cents, 8 cents, whatever you like. And that is the only thing that I have ticked. I have nothing else ticked. So I'm going to hit scan. We've got nothing today. So, and that's another thing. If a scan comes up with 0, it doesn't mean it's not working. It just means that there weren't any stocks that met that criteria. So let's just see if we can go down to 5 cents. Still got nothing there. Okay, so let's see if there's anything that's had even, let's go for 3 cents. So we've got one stock. So we've got one stock today that has had and there it is, that has gapped up. Now, that's another thing you'll see here called favorite scans. And what you can do here is that basically you can create scans in the favorite section that you can then, rather than have to go in here and change all the boxes, you can just tick immediately. So here's an example. Actually, 1 second. Go on to indicators and events. So this is where I live. And what you'll see is I've got 3 scans that are saved. So just keep an eye here on this indicators section. You'll see that they will change. And so basically when I've watched some videos or over the years, I've identified scans that I particularly like. And rather than me have to go in, make all the changes, remember it, I've just got them here once. And then basically all I have to do is go in here and I can immediately hit them as a favorite scan. In order to create a favorite scan, I'm just going to, once you have found what you like, so for instance, let's say that one before that we called the breakup scan. I'm just going to go down here to save as the icon, the disk icon, click that, give it a name. And there you go. It is now saved, here we are, as a favorite scan. So that is how you save a favorite scan. Now, scan for activity. Look, once again, you've got all sorts of different capacity here. You can, scan for stocks that have closed within a certain range of their high. Also, stocks that are low. You can scan for the top 100, 500, 50, whatever you like. Stocks by volume, price increase, percentage, market cap. The one that I like to do, see, it says all stocks that close in their high. I just like to find, I'm a pretty simple person. I just like to find all stocks that close on their high. And so there we go, and we've got 13. And once again, you see, by doing more scans, I immediately know what is it that I'm looking at. I'm looking at all stocks that close in their high. Because to me, a good indicator of stock that is heading up is a stock that closed on its high. And so once again, as I say, it doesn't mean it's a buy or a sell, and that's not what this software does, but it just identifies, ooh, PLS, oh, look at that, identifies to me that this is a good indicator of what likely may lead to a price rise in the future. So I say I would do this, the stocks that close in its high scan every day. Now, candles. My advice is just have them all ticked. Some people say to me, oh, look, I don't want to have bearish indicators because, I've got no interest in buying bearish stocks. And my perspective is, well, if I'm in a stock, wouldn't I want to know if a bearish indicator has occurred? It doesn't take any more time. So my advice is when you're doing the candlestick pattern scan is just have them all ticked. Let's see how we go. And you can see once again, so, scan, scroll and add. We've had 8 stocks have come up with, with a candlestick indicator. It's not saying that, these are buys. It's just saying that these are the ones that have met it, that have a candlestick indicator has developed. And it's a case of scanning, scrolling, and adding any of the ones that you find interesting. Now, the indicators and events. All I can suggest to you is that just basically, spend some time and learn things about RSI, stochastic oscillators, Bollinger Bands, etc. As I've said, go to Investopedia for good definitions. But once again, you can look for all sorts of combinations. You can change values. You can look from that above, below, crossed above, crossed below, all sorts of, exponential moving average, close. You can look for all sorts of things. And then when you found what you're after, you just hit scan, and you'll then get a some results. Now moving along to Darvis. So we do have a Darvis ebook. I absolutely love the Darvis scan. One thing I would encourage you to remember is that, there's 3 key things with Darvis. First of all, it's important to understand that Darvis was developed in the 1940s and 1950s. And it's quite amazing that before then, he didn't really have technical analysis as much. And it was primarily Benjamin Graham-esque value investing and fundamental analysis. And Darvis was the first of his type, or first of its kind, to develop a methodology that not only identified an entry point, but he also had a stop loss. And this is what the orange part or red part of the box is. What I would encourage you, though, is to combine Darvis, which is wonderful for identifying entries, but combine it with modern techniques and modern methodology and access to modern resources. For instance, things like ProTrader, share price, daily data. I mean, Darvis didn't even have, in some cases, end-of-week data. And so I use Darvis to identify my entries, but I use my own capacity to identify my exits. And that's what I always encourage you to do, is use Darvis as an entry indicator, but use it, I wouldn't use him for my exit indicators or exit points. The other thing to remember is that Darvis is a wonderful entry indicator for, when stocks are consolidating and moving up. And so it really only does find indicators 75 to about 80% of the time. There is a period when it just basically won't find a great deal. And what basically Darvis is saying here, for instance. So here's a classic example. So this was a Darvis box was formed here on the 11th of May, and at $43.68. And so what you would have done is that you would have put your start on your online trading account or with your broker at $43.68. It's not saying that you should buy anywhere in the blue box. Now, what Darvis would be saying is that, say, you set your entry at the top of the box. If you picked it up, let's say that you picked it up here on the 14th of May, he would be saying, well, you should be, as long as it was in the blue box, you should feel comfortable to hold it. And then say, but I do stress that I wouldn't necessarily use that. I would often put my stop losses at a different point. As I said, I wouldn't use Darvis to identify my stop losses or my exit points. Another thing to remember with Darvis, once an entry indicator has been identified, even if the box breaks down, it doesn't take away from the validity of that entry point. And so here is a classic example. So I'm just going to get rid of these trend lines. So Davis box was formed here on the 22nd of October, and I put my start at 61 cents. Now, the Davis box actually broke down, but it finally went for a bit of a kick up, and finally I got hit. I picked up on the 4th of January. Now, it pulled back again, but it didn't hit my stop, which was at 50 cents, and finally broke through on the 14th, 15th of February. And the point that I'm making is that the entry point that was identified nearly 4 months earlier on October the 22nd was as valid then as it was when on the 14th of February. So as I say, just because when a Davis box breaks down, it doesn't take away from the validity of that being an entry point. And an example here, for instance, with Bega cheese. So you're saying that you should put your start at $5.50. You can see that it hasn't touched it since the box was formed. So if it then breaks down, well, you haven't got in. It's not. I want to stress. It's saying that you should be entering that position at the breakout of the box, not anywhere below the box or in the blue. And another example what I talk about with once a Davis entry has been created. So here is a classic example with Galaxy. So on the 15th of January, the Davis box was formed. I put a start in my online trading account at $1.31. Now, I've still got that in my trading account now, and I'll probably expunge it at the end of this financial year. But it's not saying that, oh, well, if you're happy to buy it at $1.31, then you should be even more happy to buy it at 69 cents. Well, why should I? It's going down, albeit it's now consolidating a bit. This has been identified by the Davis box as a legitimate entry signal or entry point, and so I will wait for it to break that level again. And please understand, it's up to you to manage your starts and your trailing stops in your online account. So that is how you do the Davis scan. Look, I'm not going to touch on fundamentals because basically it speaks for itself, and that's more of for our SMSF investors. So moving to the Guru scans. So with the Guru scans, what you'll find is that some will really speak to you and some won't. And it doesn't mean that they're good or they're bad. It just means that you don't have to do every single one. And so things like the ones that I do every day is I would do a big candle and I would do a higher high, higher low. So let's just have a look at the big candle scan. Now, the reason why I love the big candle scan is that at the end of the day, I'm a volume trader. The reason why I love volume is that to me, it's money on the table. If there's a big volume or if there's a volume movement, it means that someone has made a decision and has put their money in the mouth. And I feel far more comfortable with volume than I do with patterns or with other technical analysis indicators. Now, today we've got zero, mainly because I think today has been a fairly quiet day. So we haven't got any big candle scans. So let's try the higher high, higher lows, and let's see how we go. There we are. We've got one. S32, and the reason why I like the higher high, higher low scan is that it means that it's starting to develop an upward trend. And so with the big candle, let's just have a look. What I'll do here, we'll go for a general market scan. I've got no idea, as opposed to, oh, there we go. You can see the difference. Now, now I've done a general market scan, I've got 13 stocks that come up straight away. So you can say it is the big candle scan I absolutely love, and I would do that every day. It's often a very good sign that I personally like to identify good stock movements. So the other ones here that I do very regularly is I would do things like the Divergence scan. So here's where I do my OBV or Stochastic Oscillator or MACD if I want to do them by themselves. I also would do the Sam's Davis box. So Sam does the Breakout Wednesday show. So Sam has a much shorter period. His confirmation boxes are much tighter than mine. So let's give that a go. I'm going to do a general market one. Now with the filters, as I mentioned before, I only use the filters when I'm doing a general market. I would always encourage you to have the ignore results that are less than a certain value and or volume, because you don't want to get caught in an illiquid stock. So let's just see how we go with Sam's Davis box. So we've got two, and there you go. to grey. So look, this is a classic example of a Darvis stock, i.e. it'll just be Darvis box upon Darvis box upon Darvis box. And that's a very good sign. I did trade this one. I set my start on the 5th of March. I finally got in on the 14th of April. I got out here at 35 cents on the 21st of April. I haven't got back in again, but it's a classic example to say with Darvis. It looks for strong stocks that are in an upward, or identifies strong stocks in an upward direction, and it just builds on them. So it is a very good scan in that regard. So that's basically the Guru scans. Now, before we go, just a couple of other things. You've got, as I say, you've got all these. You can set all your trend lines and so forth back here. I'll just try and pull up another stock. And so you can create all your own boxes here. You can change all the colors, the shading. And remember here, the other one is this price measurement tool. So this is awesome. So basically, you'll notice that as I'm moving, both the price as well as the percentage changes. So you can put the calculator away. It does it for you automatically. And that's very good, let's say for swing traders, people who are trying to set price targets. So you can say, okay, from this point to this 10-year trend line, it's 11%, but you can also use it to identify stops. So let's say if you want to, you're looking here at, right, I want a 10% stop loss. You can use that very quickly to identify. Another of the functions here, as I mentioned before, you've got this trailing stop. When you're about to enter a position, you put the entry price, the stop loss, as well as the kind of stop you're going to have. And look, I would tell you, I would use this for every single stop or every single stock that I get into. And what you'll see is the black line is the original entry price. The red is your initial stop. And then when it goes up, and once it has gone into profit, the red line turns to blue. And you can see here, as I say, it's basically, the great thing of the stop loss is that it basically acts as a handbrake. And I use it for every single stock I get into. You'd also use this with the training mode before that I mentioned. Different kinds of stocks have very different kind of stops. And so, for instance, with Fortescue, which, is an iron ore company that's exposed to China, I would have very tight stops because if I'm right, I'm right. If I'm wrong, I don't want to be more wrong. As opposed to an industrial stock like Domino's, which, you may have a wider type stop. But I use it for all of my positions, even if they're, and I got it taken out today, even if they're fairly small stocks. So that is the stop loss function. So, well, thank you very much for your time, and I hope you've enjoyed it. And if you have any questions, please feel free to email me. Thank you.